What's up, amazing traders? Trust you are doing great. In today's course, we're going to be talking about top down analysis part 1. Now, basically, I divide my trades into two segments. What pairs is? I think this is the S&P 500. Basically, I think that should be it. This is the S&P 500. Now, when I talk about dividing my trades into two segments, what do I mean? You want to take down some notes here because this is where the juice start coming out. So I divide my trade into two segments: market analysis. I take that again: market analysis and market entries. Okay, market execution. How you get into the market. Now this is S&P 500. Now all my students, this is what you should always do. Whenever whenever you want to trade, you've not opened the chart for, let's say, months, years, and you want to start trading, or you're a new beginner to trading, the first thing you want to do is come up onto a monthly time frame. Okay, there are many reasons why you come up to a monthly time frame, which we're going to be striking. Now the first reason why you come on the monthly time frame is to come and see the overall trend of the market. Okay, most of the times people don't know the use. People feel like you're trading on the monthly time frame or higher time frame. No, you're anticipating what, 1,000 to 2,000 pips into the future. Okay, I'll explain all what I mean by that. Now, when I look at S&P 500, the first thing I can see, the first thing I can see, now the first thing I want to look out for is what? Candlestick patterns. Okay, a lot of people trade candlestick patterns the wrong way. You want to look at candlestick patterns on higher time frames. They tend to play out for a very long time. Okay, now the first candlestick pattern I can see here is the bearish engulfing candle. You can see this candle somewhere around here, right? When we talk about bearish engulfing candle, we mean this candle. Why is it called an engulfing candle? I'll some materials I'll show you the different candlestick patterns in the next video. Now, the reason it's called bearish engulfing candle is because it's taller than this bullish candle. So it has engulfed it. It's now taller than it. That shows you the momentum of the market. If one bearish candle can be this long, okay, that's a candlestick pattern. And if we look somewhere around here, this is also another engulfing candle. Okay, this is another engulfing candle. And if I look somewhere around here, I can see what? An evening star. Okay, you can see an evening star somewhere around here. Yeah, bullish, doji, bearish. This is an evening star. Okay, this is an evening star. So this is what you want to look out for. Okay, you want to look out for candlestick patterns. Look out for candlestick patterns on monthly time frames. This is top down analysis, bro. So you want to look out for candlestick patterns, and basically if I look, I can see a trend line trending somewhere around this region. I already taught in the previous video on how you draw your trend lines. You touch the most outermost part and let it slide. Okay, two most outermost part and let it slide. That is it. So this is a trend line basically. Now, after identifying our candlestick patterns, what next do we do? Yeah, I'm sure you might be asking yourself that. How do we get into this trade, or how do we now continue? Now, the second thing you want to look out for is what? You want to look out for market structure, which we'll look at that on a lower time frame. But now, we want to go down drawing our zones. Okay, we want to draw our zones. Now, the first way to draw your zones properly, I already taught that in identify support and resistance. When I look out for that most obvious turning points in the market, most obvious turning point, I can see something somewhere around here. Look at this. Price tested here, push up, tested here, push up, tested here, push up. Definitely, this is a strong region. This is a strong region. Okay, this is what? A strong region. Definitely, this is a what? A strong region. A strong region. A strong region. S&P 500. S&P 500. S&P 500 has not really been doing too much, so we don't really have like in the other pairs. So we'll just try to see what we can come out of these. Like, okay, good, good, good. So price tested. Okay, price tested here, pushed back down, came above here, broke out, tested here, respected it, and pushed up. So basically, these are the two most, two most effective zones. So I know for a fact price is going to test this zone. Price is going to test this zone, and then maybe move to the upside or break it. So that's it for S&P 500. Now there's any other thing? Okay, let's go down on a weekly time frame. Want to look for what? Chart patterns. Okay, want to look out for chart patterns, which I made mention in the previous video. Now, if you look keenly, you see what? A shoulder, a shoulder, a shoulder, a head, a head, and a left shoulder. So I hope have you seen this guy? This is what? A head and shoulder. You see that, guys? This is a head and shoulder. This is the reason why price has been pushing downward. Head and shoulders. Okay. Now just by looking at this guy, I already know where price is going to. Price is coming to test this next level here. Okay. This is a lot of pips from here to here. We're on a weekly time frame, remember. So if we zoom in, this is a whole lot of pips from here to here. Okay. This is a head and shoulder. Now after you identify your head and shoulder, you want to look now what? On you want to scale down on lower time frames. Let me adjust this trend line somewhere around here. Okay. Good. Okay. You can see how price touches just the week, right? The 2 weeks. Hold on a bit. Let me make sure I test this guy somewhere around here. Okay, good. So you want to make sure that price is actually testing that guy. Okay. So basically that's it. Okay, let's take another pair. Let's take for GU, GBP USD. Let's come on a monthly time frame. There's a lot of things to delete here. Oh, la, la. Guys, just give me a minute, please. I was doing some analysis. Okay. Now, when you've already drawn your zones, I already taught you on how to draw your zones. You want to look for the most obvious turning points in the market where price has been respecting it over time. Now look at price respected here, respected here, respected here, respected here. But now this is not our concern. Our concern is top-down analysis when you open the monthly time frame. After you've drawn your zones, you want to look out for what? Candlestick patterns. And the way you should be looking out for candlestick patterns, you should be looking at the most immediate trend of the market. This is the most immediate trend of the market. Okay, don't come and start looking at candlestick patterns from around here. Why? Because this trend has already happened. It's not valid again, even though it gives you a momentum of where the market is going to. This trend has already happened, so it's not more valid. But we're looking at what is happening here. What is actually happening here? Okay, what is actually happening here? Here. Okay, what is actually happening here? What's causing GU to drop, 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 drop? Now, the first thing I can see on GU is what? I can see a morning star. Let me. Which one should I use? This is a morning star somewhere around here, guys. I'll drop the candlestick pattern so you can be able to identify them. Or some go to some images of the candlestick pattern. What is the morning star? Look at bullish, bearish, doji, bearish. Okay. For example, that's a morning star. Let's take that should be an evening star. Sorry, that should be an evening star. Evening star candle stick. Okay, that should be an evening star. Let me just go to image. Good. That's an evening star. Just remember that. You see that? Bullish, doji, bearish. Okay. It must not be red that will be here. It must not be a bearish candle. So far as the candle is a small broken candle, it's a doji candle. Now look at this. Right? Look at this. Bullish, doji, bearish. Let's go back. Look at this. Bullish, doji, bearish. So this is the candlestick pattern in charge of causing price to fall down like this. Okay, and when I look here, I can see a tweezer top formation. I will just be circling them so you can, when you're trying to identify your patterns, and I'll go and just show you on Google. So you monthly time frame when you're doing top down analysis, always make sure you're what identifying what candlestick patterns. Okay, so if we go into this picture, you see, you can see that, right? Go on to this picture, it's taking time so much to load, but you can see how they identify them: bullish, doji, bearish. Look at how price falls down. You see, right? That's just to tell you what these candlestick patterns can do to you. So let's take tweezer top. I identified also a tweezer top, tweezer top candlestick. Okay, look at this. Have you seen tweezer top? I want to show you. Look at, okay, trader psychology behind this pattern. You see, anytime price gives this double top, this bullish with a wick, bearish with a wick, and they're equal, price will always fall down. Price must always, look at this. Look at this guy somewhere around here. So there's a tweezer top and there's a tweezer bottom. Whenever you identify a tweezer bottom, price is going to skyrocket to the upside. Whenever you identify a tweezer top, price is going to drop. Now let's go back to my chart. Look at this. You see that? You see this? The 2 weeks, and look at what happens. So you see, I hope I've been able to give out some value. Let's just take one more example. Okay, let's take gold. The reason gold has been dropping first is because of these. I can see what they call a 3 month cruise. Whenever I identify them, I'll go and show you the 3 month cruise. This is what has caused gold to be dropping, and I'm very certain gold is going to touch this zone. Excuse. I'm very certain gold is going to touch that zone. So let's go on and search for the 3 month cruise candle stick. Guys, you need to practice this over and over so that when it comes to a level when you just see it, you can be able to spot it. Okay, look at that. Have you seen the 3 black crows? Okay, look at that. The 3 black crows. Look at this. The 3 black crows. Look at that. So you see, when you can just be able to spot this, you now know where the direction of the market is going to go to. So people treat candlesticks patterns the wrong way, but if you use them on a higher time frame, 3 black crows, you see, 3 black crows. So this is it. Okay. So this one right here is called the 3 black crows. I would have been writing the names, but as I'm saying it, I believe you can spell it. Now, what caused price to skyrocket up to this push to the upside? What actually caused price to push up all the way up like this? Now the first thing I can see from the beginning of this uptrend is because of this pattern, this candlestick pattern. Guys, look at this. This is what a morning star. If I'm trading and I just see this morning star form, I'll just start laughing because I already know how much pips I'm going to make. I'll start envisioning it. This is what a morning star. Now I want to go and search for what a morning star, morning, morning star, morning star, candlestick. Look at that. Look at this. Look at this. Look at how price pushed up, right? Have you seen? Look at morning star, bearish, doji, bullish. Guys, can you see bearish, doji, bullish? This is why they say, or it must not be a bearish candle here, nor a bullish candle. It can be either, but this candle must be in this shape or similar to this. Guys, can you see? You see? You see how price had to push up all the way up. Look at this. Look at this. Up just because of that pattern. Bearish, doji, bullish. Okay, so you want to watch out for candlestick patterns. This is what is going to help you identify the trend of the market. Now look at that, bearish, doji, bullish. You see that, right? And look at this. It's not, and they even gave it here again. This is it, bearish, doji, bullish. So watch out for candlestick patterns on higher time frames. Okay, after that you want to identify your zones properly. I already did a topic on identifying your zones. So the reason my zone is here is because price tested it here once, pushed down, came here, tested it again, and pushed down. So definitely this zone definitely is a strong region. Okay, and it created what, a double top formation. I think in the video of chart patterns, I think you understand what I mean by a double top formation. If you've not watched the video, please go back to the first video of the course. Okay, now the reason why I placed my zone here is because price tested this guy somewhere around here, failed to break it, pushed down, came here, tested it. Okay, so this makes this area a very strong area. Okay, and even when price came around, you look at how it was behaving somewhere around here. You see that price came here, tested it, clustered of candles, then before finally pushed up, then finally break it. That makes that area a very strong area. I don't want to delete my zones and start drawing them again. I believe I've already done a video on that. So after you've been able to identify your zones, you want to come down on a weekly time frame to identify what, chart patterns. So all the videos I've done, they are very useful. If you don't understand them, watch them again. Identify chart patterns. You can see a double top formation. Okay, make sure you identify your double top formations. Make sure you identify a chart pattern. So, and guys, that's it for this video. Thanks for staying out to the very end. See ya in the next video.